Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 255 today. Is there a strong rally on the cards? So it does seem like that there are some tailwinds to the market, and the last few sessions have shown that market is not willing to stay low, and it's coming back, bouncing up. So let's see where this is all pointing towards. So in terms of the market internals, good day for the markets. Most sectors did quite well. FMCG leading the pack with 2.5% gains. Consumption stocks, auto stocks, real estate stocks, bank nifty, IT stocks all doing quite well. So it does seem like this current weakness is not sustaining. However, we remain cautious in terms of the overall global cues, because they suddenly can be a big trend change whenever it happens. The big news for Indian markets is that crude has softened quite a bit, so have all commodities. So this is fueling a good hope in most growth stories, as margins will again look upwards. Only metals, energies, some commodity stocks, and some public sector enterprises stocks were reeling lower. The gain, while it was across most indices, small caps did not participate as much, and small caps were up only 0.5%. Nifty was up 1%, 1.1%. Nifty Next 50 was also up 1.7%, and so on and so forth. The weekend investing small cases, while they gained mildly, but they were not really in line with the broader indices. So we'll have to see a couple of more sessions how this trend pans out. It does seem like that the breadth was not there, and the indices were up mainly on the back of some heavyweights and some large stocks in each of these indices. Nevertheless, many of the strategies gained between 0.5% to 1%, and some strategies remained flat. This is the heat map of the day. You can see that the big gainers are Bajaj Finance, Bajaj Finserv, Kotak Bank, Hindustan Levers, Nestle, Britannia, hugely up 5%, Maruti Titan, Bajaj Auto, Mahindra, Asian Paints, all the consumption stories, FMCG stocks up very nicely. Cement also up mildly. Reliance was down, and so was ONGC. So the crude oil fall has bettered some of these stocks and some of the mid caps also, in terms of MRPL, Chennai Petro, Oil India, so on and so forth. Also, energy stocks, as I said, Power Grid, NTPC, etc., also a bit softer. In terms of top gainers, Kansai Nerolac and Tube Investments up almost 9%, Saregama and CEAT up almost 8%, ABB India up 6.5%, Oil India, as I mentioned, Oil India, MRPL, ONGC all down between 5 and 8%. Balrampur Chini and Cyient also down between 3 and 4%. So what has happened in the past, as this Bloomberg data suggests, is that anytime we've had 3 consecutive months of fall in Nifty, we've had a 7 to 9% kind of a jump from there. So, the data goes back to more than a decade, and several of these instances have been pointed where you had 3 consecutive months of Nifty fall, and that's what we had in the last 3 months of April, May, and June. So if history were to repeat based on these instances, then we'll have a 7 to 9% kind of a rally that could translate into Nifty going towards 17,000 plus. We've already gained from the bottom about 5 odd percent, and we are currently at about 16,000, and it is also very delicately poised, the Nifty, as in there is a huge gap just above 16,000. So if market does go up from here, I think it can continue to do so till about 16,900 or so, but that will obviously depend upon a lot of other factors. FIIs for the first time in many months bought stocks yesterday. Today's figures were not out yet. And what we can see here also is that on the Nifty charts, The 200 DMA is now placed near 17,100, and by the time we go up, it will come somewhere close to the 16,750, 16,800 mark maybe. So, and that is also a pivot here at 16,750, 1680. So, the 16,700 to 17,000 will probably become the next sort of battle zone if this gap also gets taken out in the next couple of days. So, I think there is a possibility that before the major results are out, the Nifty may run up a bit, but that is of course guesswork as far as I can guess. And if this trend sort of breaks down here like this, maybe below 15,600-700, then of course we'll go back and retest the lows. So I think this gap is important, that we take out this gap and then gradually move towards 16,750 by end of July, and then of course by last week of July we'll have the next 75 bips expected raise from the Fed. Whether that will come through or not, that will sort of be the point for a turmoil again, I think. So this is how the setup is there. Although in none of our strategies we really care about how the setup is there, we are basically following each strategy rules and not worried about how the market is panning out, and that is how you remain unbiased and you remain sort of essentially not fearful about the markets even while it's going down, because you never know which sector will start to rotate into the market and go up and so on and so forth. This is the Q1 report card for weekend investing strategies. This will also be sent out on email to all the users. Here in the top table we have the Nifty and the indices, how they performed in this quarter. So all indices down between about 10% to 14.3% was the fall in this quarter. The long-term CAGRs also are very similar, low double-digit sort of long-term CAGRs. However, the drawdowns are very different. Small caps have seen a 61% drawdown. Mid and small caps have seen a 50% drawdown, so on and so forth. For weekend investing small cases for this quarter that has gone by, April 22 to June 22, we saw NG 50/50 down by 5%, NNF 10 by 12%, MI EverGreen down by 10.4%, LTC NX 200, which was largely in cash, down minus 3%, MI 20 hit quite hard, minus 16.7%, MI 50 minus 12.8%, MI 25 minus 9%, MI 35 17.7%, MI 30 minus 11.3%, MI all cap minus 16%, again a bad hit, MI ATH minus 8.5%, and MI ATH2 minus 14.4%. These are the long-term CAGRs on these strategies and the long-term drawdowns. I will not get into these. But what we can see from here is that MI25, which is a small cap strategy, and MI50, also a small cap and mid cap strategies, have sort of done a bit better than the benchmarks. ATH has done a bit better than the broader benchmark at CNX 500. ATH2 has trailed. MI30 is in line. EverGreen is also sort of in line. NNF10 is also in line. So mainly MI20 and MI35, which are rotational momentum, have fallen more than the benchmark, but they usually do recover faster also when the swing back ups comes. So yes, nothing much to talk about this quarter. We've had a drawdown in every strategy, and that is totally unexpected given the way the market is. And if we do get another 10-15% kind of market fall, I think that will be a very good point for entry and for addition of capital, although whoever is running their SIPs etc. should continue to do so. I am also doing so on my own account, and this is part and part of the cycle in terms of, you know, see, the worst part is that most people, they came in at the top, and a significant amount of people are leaving the market right now. At least that's what we're seeing. So that is something that is sort of, you know, it never lets you build that capital or build that wealth over time. I mean, if in every cycle you will come near the top and leave near the bottom, you will lose every time. So when will you build that? So to build that, you need to sort of, you know, stay in and bear the pain for some time, and have that hope that yes, we are in a growth economy, growth country, so things will come back, and the strategy is self-correcting, so strategy will also come back. And that is, I think, the main sort of takeaway that you should see from the last 5-6 years of experience that is there in these data points, that you know, drawdowns do come back, and you need to, you know, stay a bit hopeful on the market. So thank you so much for giving your likes to this channel, and if you've not subscribed so far, please do so. Please do share this with whoever you think can make use of this. That will be really something that will be help the channel and the community. Thanks so much. Bye.